Hey guys, Stockaholics, appreciate you guys being here today. Today I'm going to be talking about the Suez Canal incident. What I mean by that is currently there is a container ship that is blocking the Suez Canal. I'll be giving you guys my thoughts regarding oil and oil tankers, since those are usually the segments that I follow in terms of investing. I'm kind of nervous making this video because I feel like as soon as I make this video that the situation has the potential to be resolved. So we'll see what happens though. But maybe I'll make the video for austerity and I can be like, I told you so, or whatever. Or you can tell me how stupid I was. All right, so I'm going to try and avoid being redundant, repeating some things you probably heard in some other sources. If you're interested in the recovery effort or what happened or anything like that, find an expert or a trusted news source to kind of get that kind of information. I'm going to be focusing on when we're thinking about oil transport through the Suez Canal and some information, especially when we're thinking about that in an investing mindset. Yeah. Okay. So we'll start with oil transport. Then I'll talk a little bit about what happens to shipments if they cannot go through the canal, and then also what effect this can have on oil shipping rates. All right, oil transport volumes. Okay, of the 39.2 million barrels per day of crude oil imported by seaborne methods in 2020, 1.74 million barrels per day went through the Suez Canal. And this is according to data intelligence from Kepler. Now, this is about 4.5% of global crude oil shipments that are transported via seaborne methods. So one thing, this kind of threw me off when I first saw this number, is this number here, 39.2. That's a lot smaller than when we're thinking about it in a non-COVID environment. At least in 2019, this number was approximately 20 million barrels per day higher, which to me is a little bit interesting because when we're thinking about the COVID situation, there was a lot of oil that was being stored on tankers, but there was a lot less oil overall that was being transported. Another thing that's interesting is this number here. So another way we can think about this number is in terms of Suezmaxes. Suezmaxes are the largest crude carrying vessel that can go through the Suez Canal, hence the name. And they carry about approximately 1 million barrels of crude oil. So when we're thinking about this number, 1.74 million, what that tells me is that most of the time there's approximately 2 Suezmaxes on any given day going through the Suez Canal, and then maybe we're thinking the 4th day out of 4 days, so the 1st, 2nd, and 3rd, there might be 2 Suezmaxes. The 4th one, there'll only be 1 Suezmax. Another thing to consider is that this is talking about oil being transported in either direction. Now, most of the time, though, we're thinking about this in terms of oil being transported from the Middle East to Europe. Okay, now this number is really significant, but it kind of pales in comparison to the product tanker demand or through the Suez Canal. Now, just under 9% or 1.54 million barrels per day of global refined products flow through the Suez Canal last year, according to Kepler. So although this number here, 1.54 million barrels per day, is smaller nominally compared to 1.74 million of crude, this represents a much larger percent of the product tanker fleet. So there is a lot more product that goes through the Suez than there is crude. When we're thinking about it in terms of overall shipping percentages. So this makes sense to me, especially some of the things that we're seeing in Europe, where over the last few years we've seen a bunch of older oil refineries being shut down. When we're seeing that this product has to be made somewhere else and then it has to be transported to Europe. So it's no longer being made as often in Europe, but instead it has to come from other places. Okay, so what happens to shipments that can't go through the canal? So commodity analysts at Kepler raised the prospect of diversions in a statement Thursday. As delay continues, shippers will have to broach the unpalatable decision of whether to make a U-turn and head for the Cape of Good Hope or to kind of wait it out in the Red Sea and Mediterranean. At the time, Kepler said the prospect was, quote, unlikely, given the extensive delays that would cause. Giving a sample route, the company said Suez to Amsterdam at 12 knots is just over 13 days via the canal, or 41 days via the Cape. Now, what they're talking about is the Cape of Africa. So they're, instead of going through the Suez Canal, they're talking about these vessels going all the way around Africa to get to their destinations. And as you can see, this takes about 3 times longer for them to do it. So I didn't finish this statement over here, but shipping containers, they kind of need to weigh what they want to do. So I think what a lot of them are doing is they're probably going to try and wait this out. And the reason for that is they have to kind of see, well, can this logjam be cleared in the what is the difference between these 28 days? I think in most situations, the answer to that is probably yes. It will probably be cleared within 4 weeks. And if that's true, then they can save money by probably waiting it out, because the fuel cost for them to go all the way around the Horn of Africa is a lot of money. Now, there is some other costs too. There's still the crew costs. So shipping companies, they kind of have to weigh it. They have to feel it out. Now, if there's some information that comes along that suggests that it's going to take a long time to clear this shipping container or shipping ship from the Suez, then we might start to see some these ships say, frick, all right, well, you know what, I guess we're going to go around the Horn to kind of deliver some of these shipments. Okay, so what effect does this have on oil shipping rates? The answer to that is it kind of depends. It depends on if the problem can persist, obviously. But if this problem does persist, and this is based on these numbers up here, this event has the equivalent effect of reducing the product tanker fleet by an estimated 6% and the crude fleet by an approximately 3% in the very, very short term. I think that these numbers can change. So that doesn't mean that the shipping rates will improve by 6 or 3%, but it means that if you removed those amount of vessels from the fleet on both of those segments, whatever the shipping rates would be in those scenarios is what they're going to be. Hopefully that makes sense. But there are some issues with this because you have to think about the limits to the amount of fuel that can be transported through the Suez Canal. There's a limit to the size of vessels that can go through there. That doesn't apply to different kinds of vessels. And what I think is likely to happen is that a lot of this fuel that might, if this does happen, this is speculative. If this does happen, a lot of the fuel that might go on Suezmaxes or other types of product vessels will find themselves on much larger, more efficient vessels that will go around the Cape. So that doesn't necessarily mean in the longer term. That doesn't mean that we're going to see. We'll still probably see some Suezmaxes and things like that, especially if they're already loaded with fuel. But a lot of what happens in these crude segments is that whenever there's a huge discrepancy in rates between a different type of vessel, ship brokers and their customers, they notice this, and then they'll hire different vessels. And VLCCs tend to be more efficient when we're thinking about routes. By the way, they hold twice as much crude as a Suezmax. They are a lot more efficient in routes outside of the Suez Canal, yeah. But I do think that there will be an ebb and flow. But I think that larger vessels, cargoes, are more likely to see more of that business if this problem does persist over several weeks. All right, so as of Friday, March 26th, there's one oil tanker company that is up significantly more than some of their competitors. And what I think this means, or at least the way I interpret this, is that the market thinks that this company is going to have an advantage over some of their competitors because of the type of vessel they have. So the company I'm talking about is NAT. And again, I think they're up 20% or so on the day. And they own a fleet entirely of Suezmaxes. Now, for me, this makes absolutely no sense. And to be honest, I'm not that surprised, because I think that this is one of the most heavily retail-owned oil tanker companies. But the advantage to this company is, again, that they have Suezmaxes, right? But the advantage to a Suezmax vessel is that it can go through the Suez Canal. It is the largest type of vessel that can go through the Suez, right? Well, if the Suez is blocked, why is that an advantage for NAT over their competitors? It's not. It's a disadvantage. So we'll see if the market picks up on this at some point. I won't hold my breath, but I find that's just something funny that I thought I'd share with you guys. Okay, I kind of wanted to share this with you guys, and it's one reason among several that I'm not super thrilled about this Black Swan event with the shipping container blocking the Suez. One reason I'm not super excited is this, and one of the damn Europe is still in lockdown mode. So Europe is one of the main segments that is still massively below 2019 terms of oil demand. We've seen a lot of parts of the world where the oil demand is at 2019 levels. In some places it's even higher than 2019 levels, but Europe has been going the other direction. So as of March 22nd, these maybe a few things changed in the last few days, I don't know, but these dark red countries are still under complete national lockdown. These orange ones are under local lockdowns, and these pink ones are still under national curfew. What all this does mean is that although the Suez Canal might be blocked, we still should keep in mind that there's still very low oil demand coming from Europe compared to historic oil demand, right? And we should also keep in mind that the Suez is not the only route that can get oil to Europe, and we should also consider that there are different pipeline segments that can transport different kinds of oil to Europe as well. So although that this might have some effect, I think that some of the excitement, especially when we're thinking about the tanker segment, might be a little bit overdone when we're thinking about the Suez blockage. Now, I do want to say, if this persists for the other segment, the container ship segment, that could which is already a very tight segment. I don't follow it as closely as the crude, but to my understanding, it's a very tight segment. That could have significant impacts, at least compared to crude, as long as that blockage persists. All right, so I talked about this in my most recent oil tanker video. This is a company, DHT Holdings, but it doesn't necessarily need to be DHT Holdings. You can probably use this kind of a idea for any oil tanker company. A lot of them tend to have this kind of a price movement pattern. Yeah. Now, what I want to talk about is that extrinsic events can lead to huge rates. We're talking about tankers and shipping in general. And what tends to happen when rates get very high, it can lead to huge stock price increases. Now, I'm not saying that is going to happen because of this event. I'm just saying that it could happen. And whenever, a lot of the ways that I think about this is that whenever there's not enough ships to move cargo, rates go up. So if there's not enough ships, because a lot of those vessels have to go around the Cape instead of going through the canal, it could cause rates to go a lot higher. This may be another event like we've seen before. It could last a long time. Who knows? Could last as long as the oil glut. I kind of doubt that. Maybe it's not the best comparison. But that one lasted a few years. I don't think that would happen. But maybe it could last a few months, just like what happened with something called the Costco sanctions, or even the COVID contango under worst case scenarios. But if that does happen and it does lead to higher rates, I would expect that it would lead to these very high price movements in stock price, because again, the stock prices tend to move the rates. They tend to match the rates that the vessels receive. Now, one thing you'll notice is that when these events end, the rates tend to plummet, and when the rates tend to plummet, so too does the stock price. So if it is an event you're interested in, to me, and this is not investment advice, it would be a trading decision, because a lot of what you would be investing in would be not necessarily the underlying fundamentals of the tanker industry, but necessarily that you're betting on this event lasting longer. And we'll go over a little bit more of that in a little bit. Okay, I wanted to share this with you guys. And I saw this recently. I saw this picture, and I recently heard this idea from Calvin Froedge, and I thought about that, and for a second I was like, oh, when I thought about that. Now, I hope that this doesn't happen, but if what I'm sharing does come to fruition, it would make me a little bit more bullish on this event having some kind of lasting effects on oil tankers. Now, what we're looking at here is the container ship that is stuck in the Suez Canal. You can see that the front of the ship as well as the rear of the ship is embedded in dirt. Now, ships, they're not designed for this kind of a load-bearing kind of a situation, I guess we could call it. They're designed so that all of the weight on the vessel is kind of dispersed equally throughout the vessel and into the water. Now, in this case, you can see that the front is probably holding a large portion of the weight, as well as the rear, right? And we're seeing that instead of this center section being able to disperse a lot of this weight into the water, it may have a lot of this kind of being supported by the actual integrity of the ship. So I don't know if the ship will be able to support that. I hope that it does, but it has the potential to lead to some kind of a failure event, and that is something to consider. Now, I'm not giving advice, but I would suggest to be careful. These extrinsic events that affect supply and demand of vessels, they can be very profitable for investors depending when you get in and out, but they can also be extremely costly. Shipping stops can drop by double-digit percentages very quickly. What I noticed in the frenzy with the COVID situation that happened last year, there was that COVID contango. There was a lot of excitement, a lot of new investors in the shipping space. They bought in, and a lot of those people tended to buy in when there was a lot of excitement. Now, to me, this event, there's probably very little alpha. So what I mean by alpha is that you have some kind of edge on the market in guessing if the ship will be dislodged or not. It's hard to know. Who knows? It could be dislodged by the time I finish uploading this video, or it could still be there a few weeks from now or months. Yeah. Investing in some shipping companies now is, I believe, a play that the Suez will continue to remain blocked for the coming weeks and longer. This might not be true for all companies, but it is definitely true for some. For example, the one I'm talking about here, NAT is up 20% on the day today, which, by the way, is kind of stupid when you realize that Suezmax's specialty is in transporting oil through the Suez, which is closed. I mentioned that a little bit before. Perhaps if you were on the ground and you were there at the Suez, or you had some kind of contact with somebody over there, and you had some kind of engineering background, you could make a successful trade where you have an edge. I believe in this situation. All right, so I expect that the moment that the ship is dislodged, within the next trading minutes or hours or whatever it may be when that word gets out, that whatever oil tanker prices that were gained because of this event, I think that there's a very strong chance that those gains will likely be lost into a correction. Yeah. So to me, the way I see this event is that, which is kind of disappointing for me because I sold my oil tanker shares a few weeks ago. I don't remember. It was pretty recently. But if I'd held just until this unpredictable black swan event and then sold, it would have been awesome. So the way I kind of see this event is, to me, this event would be a great selling event if you were still holding shares and you were interested in selling them, if you had any inclination to do so. And again, this is not advice. Now, there is supposedly a very high tide coming this Sunday in the Suez. So I would expect that if the ship will be dislodged in the short term, that it will likely be dislodged by then. With that, this is speculation, but if it's not dislodged by Sunday, when the tide starts to go down, it seems to me that whatever is happening, if they couldn't get it out with the high tide, it's going to be less likely they'll get it out in the short term during a less high tide, right? Okay. I also kind of want to say that I'm already kind of disappointed by this event. And it's not because I missed out on whatever gains there might have been in the last few weeks, but it's more this, and that it's, in my heart, I feel like this event is going to delay scrapping. And that's something that I really want to see, and an expectation that I have for there to be a bull cycle in tankers. So I know how these these oil tanker execs think. I think I do, based on observations I've made following these guys the last few years. And what I think is that if there is a bump in rates, and again, we've seen some really lousy rates for the last several months, we were really starting to get into that pain threshold for these guys. If this starts to lead to some higher rates, then I know that this is just going to make them more confident with their companies, more confident that they are actually in a bull cycle, which I don't believe that we currently are, and that they're not going to scrap their vessels, even though they should be. So when I look at this event, especially if it leads to some positive earnings for these guys where they earn a lot of money, I know that they're not going to scrap. And to me, something like this, especially when it's likely to be a very short-term event, I hope that it isn't a costly event for tankers in the long run. So I will say that this does have the potential to be kind of a medium to long-term-ish kind of phenomenon, if I believe some of those oil tanker companies try and get some time charters out of this event. So if they can kind of, and maybe it'd be a little hard to get to make this happen. Maybe most people will be like, you know what, that blockage is probably going to be gone any day now. So maybe it'd be hard for them to actually get high time charters. But if that's the case, and that they can be, and if I see it, I'd say this, if I see any company that is able to get a long-term contract out of this at higher than normal time charter rates, that would be a company that I would be pretty excited about. But anyway, to me, the shipping industry is fascinating. If we think about where we were a year ago, where there was extreme excitement and euphoria in the tanker segment during the initial COVID lockdowns, to the despair that we saw the months following up until very recently, and now again what could potentially be the another euphoria. It just kind of a situation. It just shows me why I'm so excited. I'm probably not going to be going away from this industry anytime soon. It just seems like because of this volatility, there's just so much opportunity out there. And anyway, anyway, I hope you guys found something useful in this video. Hope if you're still involved in the tanker industry, congratulations. The last few weeks, I'm sure I've done very well. And hopefully if you're doing any trades out of this, you can get something useful too. Anyway, I'll see you guys later.